Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, November the 24th, 2010, and like we do every night, it's time to look at the markets, so check it out. Okay, the world markets closed up today. This started with the Hang Seng Index gapping up this morning and then selling off for the rest of the day, but still a gap above yesterday's close. We're going to start off looking at this one here. The main thing is with the gap situation, you don't consider them at all with the Hang Seng Index because they gap every single day. It actually is doesn't help you in any way, shape, or form. You do have another shooting star, which is another sell signal. It should be a sell signal, and I'll show you why. Low point here, lower low here, downtrend. Low point here, 22.9, 22.9. This is flat, all right? Low point of the RSI, lower low of the RSI. In all cases, trending down. The MACD histogram, lower lows, trending down. Low points of the MACD itself, moving averages right here, trending down. Here, same way, okay? There's basically nothing confirming the flat trend of the price activity seen on the Hang Seng. So what all that hoopla means is this low point of 22.9 and this one here of 22.9 is flat is false. It's actually got to fall lower. You know that anyway from looking at this candlestick formation right here. That's a continuation signal, very clearly defined continuation signal to the downside. And then if you were actually having a bottom, you get something like this, a hammer formation like that. Okay, you're not getting that. So you need to wait for that particular signal. And this one right here is telling you you've got more room to go to the downside. Expect this to come along the way. So bounce or no bounce, you should short everything in this market. There's nothing bullish about it. Okay, a quick look here at the Nasdaq. This is basically what you saw in the S&P as well, but we'll show you the S&P as well in a minute. First off, you've got this nice run up here, really substantial move to the upside, but again, no quality pullbacks, nothing. It was just a stable run to the upside, and they did that telltale sign of a absolute market peak, which is all these gaps in play. We've got a whole bunch like this we showed you in the past, like 2007 happened, like prior to the flash crash. You got a large series of low volume gaps to the upside. In this case, 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 were in play before you started pulling back to fill a couple of these gaps. Then you turn around and replace them here and here and moving back to the upside on very low volume. Of course, it's a holiday season, so we actually expected today's activity to be seen all week long, but we actually got some selling yesterday. So in any event, it's not to be trusted. That's the main point I want to bring out here. And anytime, I think if there's any one thing that I had to point out on this chart and tell you this alone should be something you absolutely memorize, and it is that whenever you have a run like this that has lots of gaps in the pattern, it's telling you that the overall market is peaking for a substantial sell-off, and that's important to note. We've talked about this before, and we'll keep talking about it. The problem that's bringing this market down is what brought this down here was the Europe credit crisis. That is still alive and well and still going to affect the markets. And when you've got conditions like this, you know it's just a matter of time for this thing snaps and erases every single bit of it. All right, so all of this right here is going to be tested. All right. Okay, let's have a quick look here at the Russell 2000 Small Cap Index. This one formed another major gap up today. You never want to trust that. Whenever they move, I don't care how big it is, if a quarter in this case or half, as in the case of the Nasdaq, half of the move is actually a gap up. What good is that? You have to chase this market to actually participate on the long side. That's not what you want to be doing, and this is why you get low volume runs to the upside. They end up failing because nobody actually gets in at quality prices, and those who do have to chase it, which makes it more skittish. Therefore, when the selling starts, you're even more willing to dump their shares, so forth and so on. So you end up getting this all erased, and you're getting that telltale sign again. 1, 2, 3, 4, 5, 6 low volume gaps to the upside. They're all going to get filled. You also notice this bear setup right here and here. Okay, that tells you that this right here that's just trending up is false because the momentum of the downside on the slow stotch indicated by the slow stotch is trending down. So this move here is false. That means price activity actually has to fall down below this line. Okay, well, you started to get a sell-off here, and then you bounce right back up on the over holiday trading, and then that we're just gonna pretend like it's not going to keep going. Well, it's going to keep going. It's going to break through all of that stuff right there. Then you're going to get into the gap fill section here. We'll talk about that when we get there. In short, I want to stay short. I don't want to be long this market in any way, shape, or form. Okay, a quick look here at the S&P 500 large cap index. What you have here is really important to note. 1, 2, 3, 4, 5. There's 9 of them. Okay, there's 9 low volume gaps below you. That is telltale perfect signal that you're going to fail. This entire rally is fraught with problems. There's a major problem in the market. It's going to fall apart. This is the biggest sell signal you can find out there. If you do have one gap up here, it's going to have to fill to the upside. So that could happen before we move back down to the downside. But again, this has got plenty of room to move to the downside, very little move to the upside. And with the issues over there in Europe, which are going to bring down the world markets, I would not, in any way, shape, or form, trust this to the long side. I cannot stress that enough. A lot of people are going to get complacent. You're going to see all the sell signs and the market keep ignoring them and keep ignoring them. That's what drives people to start disregarding all the sell signs. That's what causes people to forget about the fundamentals and forget about the technicals. And you can't do that, never. If you have your reasons to be long or whatever, that's fine, but just know that you are going against what the chart is telling you, and I won't ever do that. So if the chart here is telling me do not trust it to the long side, plain and simple, I'm not going to trust it to the long side. As I've said before, whenever you're analyzing the U.S. markets, you can always double check your analysis against the VIX. The VIX runs the opposite of the overall markets. So if the overall markets are bullish, the VIX is going to be bearish and vice versa. What we have today on the overall markets is a straight up rally, forget all the bearish reasons out there, just rally. But the VIX doesn't confirm that. In fact, it's showing a hammer signal, which would be a buy signal on the VIX and a sell signal on the overall markets. So one of these two is lying. Either the VIX is lying or the market's lying. And we already know the markets are lying. If you look at any other indicator, volume, slow stodge, MACD, RSI, they're all telling you look for a bigger move to the downside. So the fact that the market's up today doesn't actually change anything. Price activity doesn't drive my portfolio. It's actually all the indicators brought together. And again, as we said before, this particular chart, the VIX here, you'll notice from September, all right, she starts to sell off, making lower lows. At the same time period, you're getting higher lows on the slow stodge. Okay, this is confirming that this is actually a bull setup. You want to be a buyer of this sell-off here, not a seller. So what this whole sell-off here is fake. You should be a buyer here, not a seller. And that also tells you that in burst that the overall market's rally since September is all fake. So the whole thing's going to get erased anyway. You'll also notice some of your other indexes are showing the slow stodge pull back down to the 20 line and bouncing off of it as though it's oversold. Well, if that were the case, then the slow stodge of the VIX would actually be up here, overbought. It's not that way because it's not true. So I would, again, trust the VIX and ignore the market activity. I'd short the market activity, not be long the U.S. markets there, or the FTSE or the Hang Seng. You also got another gap here to fill. That's plenty of that there. Like I said before, the charts never lie. They should always agree with each other. So whenever you do your analysis, if you're a bull, check it against the VIX. If you're a bear, check it against the VIX. Right now, we have to be a bear because that's the only thing that's being confirmed by the VIX. More confirmation of the VIX here. Note the trending up of the MACD. All right, she's moving higher. She's getting more and more bullish. Here at the low points as well. Okay. Sorry, I can't draw today. There you go. And high points, higher highs. Okay. All signs are confirming that the VIX should be rallying and not selling off. In conclusion, I'd be a buyer of the VIX or inverse ETFs going against the overall markets because the markets are lying to you. All right, pretty easy, pretty cool. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, we have a holiday coming up tomorrow and then a half day on Friday. I'm not going to be on the video on Friday, so I'm not going to come in for half day. Basically, this is my last video for the week. We will have a video alert issued this weekend on our website. You can check that out, and we have some new stuff coming out as well. And if I get enough time this weekend, I might do some of that on the website, but we'll just kind of see how it goes. Enjoy your holiday. Take care. God bless. A quick look at our disclaimer. There's the disclaimer. Read it and weep. Happy Thanksgiving, everybody. Take care. Be careful.